Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week get everything you need to know in 90 seconds at 9 o'clock with news China is struggling to regain its economic momentum, and perhaps the US is as well. Although not as weak as the May result, the June factory survey by the Dallas Fed in America's oil patch remains weak. Shrinking new orders are the key feature, and loan demand is weak in that region too. And factory sales, however, rose in Canada in May data released overnight. That is their third consecutive rise and their seventh rise in the past 9 months. In China, complaints against banks are rising and sharply. Most seem to revolve around banks not letting borrowers repay their mortgages early. Chinese households are prioritising savings over consumption as economic uncertainty rises. On the other hand, banks stand to lose a lot if large numbers of borrowers repay early. And Beijing is clearly worried about excessive saving and what it is doing to economic activity. In this context, the apparent block against repaying loans early is frustrating borrowers and in some way making the negative sentiment worse. The recent holiday trading was notable for its lacklusterness. Authorities are worried about the growing spread of pessimism and limiting what people can say about it online. Meanwhile, China's currency depreciated as much as 0.9% yesterday to 7.238 to the US dollar in Shanghai, and well worse than the official central bank setting, as pessimism over their economic recovery continues to weigh on sentiment. That adds to a full 4% devaluation since the start of 2023. And Taiwanese retail sales rose in May. It was a modest rise from April, but a big surge from a year ago. But that was because the base was weak in 2022. But it wasn't the inverse for their industrial production, which recorded a sharpish fall from a year ago, again due to a base effect. Month on month, they actually recorded a rare rise. And Singapore's industrial production was also expected to rise month on month, but it didn't, which was disappointed them. The year-on-year retreat was worse than expected. US Treasury 10-year yield will start today at 3.72% and down 2 basis points. And the price of gold will start today at $1,925 an ounce. That's up a minor $5 from yesterday. And oil prices are marginally firmer at just under $70 a barrel in the US, while the international Brent price is little changed at $74.50 a barrel. And the Kiwi dollar starts today at 61.7 US cents and up a quarter cent from yesterday. Against the Aussie, we're also a quarter cent firmer at 92.4 Australian cents. Against the euro, we're firmer too at 56.6 euro cents. That means our trade-weighted index is just on 70.1 and up 30 basis points from this time yesterday. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.